The benefits of the cash flows are as the following. It provides information that enables users to evaluate changes in net assets. It assesses the ability of the enterprises to generate cash or cash equivalent. It acts as an indicator of the amount, timing, and certainty of future cash flows. It means that it provides an information that is helpful for the users to evaluate the net changes in net assets. That means there will be changes in the assets and it should be evaluated with the help of the previous reports. So by analyzing the net cash flow, it will be easy for us to understand what is the changes happening in net assets. It assesses the ability of the enterprises to generate cash or cash equivalent. That means it shows what are the various ways in which business can generate assets. It can be in the form of operating activities, it can be in the form of financing activities, investing activities, from where business is generating cash or cash equivalent. That will be shown in cash flow statement. It is acting as an indicator of the amount, timing, and certainty of future cash flows. It is shown as how much amount is generating, how much amount is going out, how much return is generating. That will be there in the cash flow. And timing and certainty of future cash flows are also important. That is also will be considered in case of cash flows. And if you are comparing the cash flows of over a period of years, it will be easy for us to understand what is the changes happening in each items, each activities like investing, operating, and financing activities. The presentation of the statement is classified by operating activities, investing activities, and financing activities. That we discuss that here the activities are classified into operating activity, that means day-to-day operations, then investing activities like investment in long-term assets and sale of investments will be considered in investing activities. In case of financing activities, we are considering various sources of funds and what are the costs which we are generating from that cost which we are incurred for generating that finance. That means the interest in the case of loan, then dividend to the shareholders. That all things will be coming in financing activities. Repayment of this financing also will be considered in financing activities along with the sources of funds. Okay, operating activities. The principal revenue producing activity is operating activity because it considers the business activities. Cash received from sale of goods and services, cash received from fees, commission, cash payment to suppliers for goods and services, cash payment to and on behalf of employees, cash payment of refunds of income tax, and receipts and payments of trading. These are the various items which is coming under operating activities. The first thing is cash received from sale of goods or service. That is a main business activities from which how much revenue they are generated. Then received from various fees on commissions which is related to business activities. Then cash payment to suppliers for goods and services. For goods and services we have to pay money for the creditors. That means the persons who are supplying that. That is considered there. Then cash payment to and on behalf of employees. Payment to employees on behalf of employees, if there is any payment, that will be considered as operating activity. Then cash payments or refunds or income tax, that is also considered as operating activity. Sometimes there will be payments of tax that will be considered as operating activity because the tax is paid because of the operating revenue. Then receipts and payment of trading is the main thing considering operating activities. The next thing is investment activities. Investing activities, it is acquisition and disposal of long-term assets. Investing activities are acquisition and disposal of long-term assets. Cash payment to acquire fixed assets. That means for purchasing assets, if you are paying money, that will be considered as investing activities. Then cash received from disposal of fixed assets. If you are selling an asset, you will get cash. That is also a investing activity. This investment is considered as an investment activity. Then receipts and payment from investment That means if there is receipts from the investments, that means if you are investing in equity, you will get a return, or if you are investing in some other money, that means you are investing in some other company or in any other business as loans, you will get interest. That also will be considered. Then payment and receipt of loans and advances, then made to third parties. If you are paying to other parties like loans and advances, the receipts on payments of both will be considered as investing activities. Then financing activities means activities result in changes in the size and composition of the ownership, capital and borrowing of enterprises. That means it is considering the source of money. It is considering the source of money. That means that here there are various sources of funds, right? Equity shares, preference shares, debentures, bonds, long-term loans, secured, unsecured loans, all are various sources of fund. So financing activities comprised of if you are collected any money, that will be considered. Then repayment of borrowings is there. That is important. If you are taken a loan and that is repaid, it will be considered as financing activity. So we need to collect whether it is cash inflow or cash outflow. If it is cash inflow, we will take it as a positive figure. If it is a cash outflow, we will consider deduct it from our net cash outflows.